Hello everyone, this is Juan Sarmiento and today is Saturday, November the 27th. Yes, it is a strange day to be doing the videos, isn't it? But yesterday was a special day. The markets gave a sign of a big move down. I mean, to come. You might think that is going to happen. Here are the Dow Jones. Look at that move. The VIX just spiked to close to 30%, which is a big move. Here is the S&P, big move down, and it looks like there's more to come as the Ichimoku cloud is below us. Look at the stochastics, is still pointing down. Same for the Nasdaq. So it seems like a big move. For the Dow, went down as much as 1100, which is not many times have the Dow go down more than 1,000 points. So I think it's significant. Here you have the VIX being historically larger than usual, I would say. Let's look at, let's say, a weekly chart for the VIX, and you can see that it's been bigger back in when the COVID epidemic was first detected or recognized, and now we have this big move. We have had others, but I think that this is significant, all right? So let's assume that the market will move at least for the next little while down before it can reverse and go higher, if at all. So yesterday I decided our move is better not to do any move at all. So that's why I didn't record anything. And it makes no sense to bring new trades when the volatility has spiked. This is the time to either take profits, adjust your trades, or sit back and let it be. I decided to sit back, let it be. Let's go to the monitor tab and activity and positions, no, account statement here. And you can see that most of the year we've been below water. 3,000, 4,000, never much more than that. But after yesterday, we are now positive at $2,000 profit. Okay, it's not a lot. Is 2%, 3% at the most, but it is a significant reversal. Okay, and I expect that there will be more. So not bad for a year that we just simply went through the motions of looking for trades, adjusting our trades, trying to limit our losses is what we did until this happened. You don't know when it's going to happen. It was quite a surprise for the, let's say, the Dow. Let's do the futures. Easier. Out of the blue, it seemed like it was going to, we had done the, a small correction, it was going to go higher, and then suddenly, bang, collapse. Okay, big move down. And so you never know when it's going to happen. You just have to wait and trade it this way. Now, going forward, I believe that it's going to go further down, but then you're going to have to begin adjusting your trades so that you're not caught in a possible reversal higher, because after all, we can't predict the markets that well. Okay, that's the whole idea of trading. The Genie trade is so you don't have to predict. Okay, let's go through all the trades here and see if we need to make any adjustments. Let's go to Apple, and you can see Apple has made a big move down, and I think that this is significant too. You have this comet, or what do you call it, shooting star, where the market opens higher, goes much higher, and then closes below the opening, and that's a key reversal candlestick, and now it's confirmed by this move down below it, okay? And the stochastic pointing down, and the Ichimoku cloud well below where we are right now. So we could have a move towards the Ichimoku cloud. That's just, guessing again. I use my technical analysis, and I have some sense of experience that tells me, oh yeah, that's gonna go lower. And it is a high probability that it will go lower from here, but you need to use these indicators consistently in order to get a good sense of what is going to happen, okay? And so this is years of experience telling me that. Note the volatility has spiked. Here is now above 30, 33. That's not the highest it could get. Let's click here, and for the year it has been higher here. Back in January it was much higher, when after earnings the stock went down. Look at that, volatility spike in advance of earnings, and then it came down after earnings and then went back up. So earnings is a big thing. Volatility tends to go higher and then collapse after earnings. Here is on the rise right now. Okay, let's go and take a look at the chart, analyze. This is what we have, and we have expiration here in September, and the delta is pretty low. 10% is low, and that's where we want it. Okay, we don't want it positive. If you want, you can go to the monitor tab, activity and positions, and for any trade you may have, make sure that you are in the one account statement is what I meant. And here's Apple, and then you select days back, and that will show you here on the trade history our trades. So you would copy all of that and see where you are. Okay? For this trade, whether you're positive or negative. Otherwise, you can click here symbols and organize them alphabetically, and you can see for the year we are slightly underwater on Apple. That's going to change soon. The market value of the trade, that's sort of important too, and how much money you have. If you have $2,000, that's not a lot. You're risking a fair amount. And so, yeah, that means that we could make money going forward here and turn this into positive. We'll see what happens, okay? Let's go to Abbott. In the case of Abbott, we have here for the year $1,170 profit. So, okay, you've made your money here. You can close it, you can modify it. Let's go to the Analyze tab. And I have copied the trade so I can hide the position. And this is what we have done here to date, 1194. And hide that now so that we see what our position is right now. And we can see the deltas is 28. That's not too bad. Vega is really good. All right. So that means that volatility increases will make a 1% increase in volatility will make me $271. Okay. Volatility is low, as you can see, in the 20s. Let's take a look at the chart. Do I think it's going to go higher or lower? Look, that's a reversal. Try to go higher and collapse. So, yeah, and the volatility is spiking up. Okay, so we wait. Even though the pharmaceutical companies might be doing better because of COVID, okay, and the new strains. Okay, let's supposedly that's positive. Let's go to the next one is COP, that's ConocoPhillips. Again, volatility spike, and when that happens, then we have usually a good move in the stock. And I had made adjustments, as you can see. Now we have 6 short puts, 10 long puts, 8 long calls, 5 short calls. So I took profits along the way as the market was going higher. Let's go to the monitor tab, and here you can copy all of that to like this, analyze trade and hide the position, and then you would see how your moves affected your trade. Okay, and if you copy everything, you'd see the overall result for this trade, this, I guess, collection of trades. Let's copy them all. So you can see, you can do that, and you will see how each move was meant to either protect you or collect profits. And this is where we are right now. We are $130, okay? And the delta is 34, which is relatively low, and the Vega is more than 100, okay? So, no need to do anything, I don't think. The stock, this is ConocoPhillips, so it's, I believe it's an oil company, could go higher. It all depends on the economy. Volatility is really increasing, so that's going to increase our profits. Let's move on. So you get the idea, okay? Volatility is likely to increase. All we care is to keep our deltas fairly neutral as the stock goes down, because it could go higher. CRM. Okay. Now this stock we need to neutralize because earnings are coming up on the 30th. Okay, let's go to the Analyze tab. Show all. Okay, so here in this case, yesterday the put at 270 expired. And because it expired, it made my trade more bearish. Okay, so we need to adjust that. This is what we have right now. Okay, so we need to perhaps sell a put here, and that won't be too bad because the stock has been going down. We need to neutralize this anyway as earnings come up. Why? Because it can go much higher, and also you can consider closing the position. Let's go to the trade here, CRM here. And we have invested we have in fact on the line $3,100. So we might want to close this simply because earnings are coming up and volatility is already pretty high. It could get lower suddenly, and we don't want that. So this is easy to close because it has 4 legs. So let's say analyze closing. No, let's try and make it as a single trade. So we go to the add simulated trades, because these are different strike prices and different expirations, but since there are 4 legs, we can still close them. So we come over here and see our positions and close them. So in this case, short call, all we need to do is click on the ask, and that closes it. Okay, now let's move on to the next, which will be January, and 1, 2, 3 positions. Okay, so now we're selling those, so we need to click on the bid. Press the control key and then click on the bid, and that adds it right here. You're shorting that or selling that 270 January call right here. It's going to sell it. Again, press the control key and do the same for the higher strike price. Just click on the bid, and same for the put. In this case, 2 puts. So then control, click once, click twice, and that's your closing order right here. To verify, go to the risk graph and you see a flat line. Why? Because we're closing the existing trade. Okay, so we're going to close that, and that would simply because earnings are coming up and anything could happen. So we just take our profit. We are risking $3,100. I don't want to risk that much. If you thought that was okay to risk that much, then go ahead. You're not going to lose it all, but you know, I would say if I had $2,000 or less, I would stay on it, but not. So I'm gonna send that order, okay? And that's to be filled on Monday. I will check it out on Monday and see if I need to adjust it. I don't want to end up, chances are it will fill because volatility will increase if the markets continue to go down. Let's go to Home Depot. Okay, Home Depot December expiration, as you can see, is when the short expires. We have a neutral delta, 3%, 3 points, that is. That looks fine. Let's go to the chart. Okay. It looks like the stock is going down. This candlestick, by the candlestick indication, it looks like it's going down. How about if it goes to test the Ichimoku cloud? That's quite a distance, and we could make good money if it does go down. Do I need to neutralize it? It's already neutral, so I don't need to do anything. Do I need to roll over? No, the expiration is December 17, more than a week from now. Okay, let's go to lows. Okay, low. In this case, a put expired, and that made it a little negative. Delta lowered my deltas, but 14 is fairly neutral. Deltas, Vegas, of course, are positive, and then we have here called at 250. Okay, two calls here, two negative calls. Yeah, and we have 4 puts at 200. Is it going to make it there? Well, it's quite a distance. So this is a fairly neutral trade. Let's go to the monitor tab. Account statement. We have done a lot of trading on lows. Let's see, lows for the year we have been underwater despite of all our trading. And $1,635 is what we have, that's what our maximum risk is, and I'm perfectly happy with that. Let's just leave it at that. And we could sell a put at 200 but I would wait until it does go down that much. Right now it's at 247. That's quite a distance from the 200. So let's just leave it there. Okay. You could also sell January call at a higher strike price, let's say 255. That's not available, so 260. And that makes our deltas negatives if you wanted to do that. What we're doing essentially is converting our long call here into a vertical spread, ignoring the other 200 strike price. Okay. Anyway, this is a consideration for next time, I think. Right, for now, I want to leave it like this in case the markets reverse and go higher. After all, we have only 1 day of this. Let's go to Oracle. Oracle, again, December the 10th, how much before that happens? December the 10th. It's 13 days from now, so yeah, we'll see that on next Thursday. Let's go take a look at the chart. It looks like it's going to break down below the Ichimoku cloud. That would be a significant move. And here we have delta negative. Okay, so according to my expectations, it's not a big delta. It's close to neutrality. Vegas are pretty high. Yeah, I'm going to leave that the way it is. Let's go to SPG. Deltas are low. That's all that I'm looking for, is my deltas low. And we're counting on Vega to give us the profits. We don't need to make it negative, delta negative. The expiration December the 17th. So, you know, more than a week from now. Let's look at the chart. Yeah, I think that's going down too. Look at the stochastics pointing down. The Ichimoku cloud is below and the volatility is spiking. This is what is significant about this. It looks like it's the first move on the volatility, so that's a good thing for us. TER, again, big spike. Let's take a look at the chart. Okay, in this case, our delta's close to neutrality. Let's reset here, reset the slices. Yeah, we are right here, which means we are at the edge of our cone here. So a move down wouldn't be too bad. Do I want to take profits? No. If our current price was above the smiley face, I would take profits on the call side. No need to do that. We are neutral here. Again, that's all we care about. December the 17th, let's move on. UPS. Okay, this is now, we are very close to expiration and we do want to change this one, okay? That's 6 days to expiration. So we want to change this and we're going to simply roll over both calls and puts simultaneously. We are very close to the strike price, so we do them both simultaneously. So we say analyze rolling and say double diagonal, and then you adjust the expiration. Well, let's say 30 days from now. What would that be? Come to the at simulated trades and look for which date will be 30 or more, 30, yeah, either one of these would do. I'm going to put the 31, gives me more money. December 31, that's 34 days from now. And so we get close to $7 there. And the result is still delta neutral. Look at the shape of it. It was cone-faced, like a cone, and now it's more like a straddle. Okay, so let's do that. Confirm and send. And if it doesn't get filled, I will check it out again on Monday, all right? WFC, and what I mean by checking it on Monday means on Monday I would adjust the price down to make sure that it gets filled. Okay. All right, in this case, I have 11 calls short, so it's slightly negative, delta negative, that's good. I could sell a put to neutralize it. Let's look at the chart here. Oof, that to me is very significant. It means it's going down, breaking below the Ichimoku cloud. The stochastic is pointing down, the volatility increasing, of course. I think it's okay to leave it slightly negative here, slightly delta negative. But if you want, you could sell an additional put here. Either sell one of the longs or add to your shorts. Like that. That makes your delta far too positive. If you sell the January one, it's still too strong delta. So I'm going to leave it the way it is right now, slightly negative in the delta. I don't want to make it too negative or too positive. So that's what I want to do. So the lesson here, you know, as the market goes down, volatility increases, all you have to do is make sure that your deltas are close to neutrality and that you take Vega profits. That means you sell puts. Okay, I don't want to sell puts right now. It's too early. Okay, but as we go along, you'll see what I do. Okay, one more thing. You might say, well, isn't that awful that we are benefiting from something that is affecting humanity, which is the COVID? Don't look at it that way. The way I look at it is, for months we've been expecting a big move in the market down because inflation is there, so interest rates are ridiculously low. They should be higher. And so that will slow the stock market. I believe that the stock market is as high as it is right now because of inflation. inflation increases prices, and increases in prices increase earnings, and that increases the PE ratios, and people invest based on PE ratios in some cases. So the market was and has been for a while overloaded. So this is not benefiting from something terrible for humanity as it is COVID. I am concerned about COVID personally and for humanity. That's not the reason why I'm trading. I'm neutral as to what causes the market. That's for somebody else to explain themselves why the market should be going down or not. Okay, even though I just gave you that explanation. I am trading at neutral. I'm defending my interests, which is my investments, all right? And this is how I do it, and has nothing to do with news or the markets otherwise, okay? So that's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.